Let's talk about 6 common credit card mistakes to avoid as a beginner. Now, credit cards are an amazing way of getting all kinds of perks, cashback, offer incentives for simply spending money on things that you already spend money on. Not to mention, it can also be one of the best and easiest ways of building your overall credit score. However, if you don't know how to use credit cards correctly, credit cards can be a disaster and it can actually have a huge impact on how much it costs you over time. Not to mention, it can have a huge impact on your overall credit score, which if you follow my channel, you know that having really good credit will save you tens of thousands, if not hundreds of thousands of dollars over the course of your life, not to mention giving you access to be able to get loans for things like rental properties on your personal home to create financial freedom for yourself. So let's talk about those common mistakes that most people make when using credit cards. The first mistake is applying to too many credit cards. Listen, it can be super tempting to sign up for a ton of different credit cards when you're first starting out, or even if you're not just starting out. And that's because credit card companies have so many different types of variety of points and offers out there. Being able to get cashback rewards, travel rewards, hotel, gas, airlines, there's so many great things to use with credit cards. The problem with applying for too many credit cards at once though is how it negatively impacts your overall credit score. You see, every time that you sign up for a credit card, it has a hard inquiry. And these inquiries can last upwards of 2 years. However, on the good side of things, typically the effect of them is pretty minimal after just a few months. Now, in terms of how much this can affect your overall credit score, it really depends, but here's what we do know. When it comes to your overall credit score, there's a category called new credit, and this accounts for about 10% of your overall credit score. Now, according to FICO, each hard inquiry that you have on your credit score would typically affect you by about 5 points. So while this may not seem like very much, if you start applying for a lot of credit cards at once, this could have a compounding effect and really have an effect on your overall credit score. In terms of how many credit cards you should apply for, how often you should apply for a credit card, it really depends on your overall situation. According to Bankrate, they state that you should wait at least a minimum of 90 days before applying for each new credit card overall. Mistake number 2, your credit utilization being too high. Now, there are quite a few different factors that go into your overall credit score, but one of the biggest factors, in fact, the second biggest factor, is your overall credit utilization. And this accounts for 30% of your overall credit score. Now, for those of you who do not know what credit utilization is, your credit utilization is simply how much of your total available credit are you using up. So let's say that you have one credit card with a total available credit of $5,000 and you are using $1,000 of that $5,000 currently. Well, if you take $1,000 and you divide it by $5,000, that gives you 0.2. Meaning that you are utilizing 20% of your overall total credit. As a general rule of thumb, you want to try to keep your utilization to 30% or less in order to have really good to great credit. However, according to studies, the credit utilization for those who have an average score of 800 or above is just around 11%. Now remember, this is the overall average, so it doesn't mean that if you have higher than 11%, you can't have an 800 credit score or higher. But you do know that as an average, if you have 11% or less, you have a very high likelihood of being able to get that 800 credit score or that infamous 850 credit score. Keep in mind, if you happen to make a one-time purchase that shoots you over that 30% utilization rate, but you pay it off before the credit card company reports it to the overall credit bureau, it's not gonna have a negative impact on your score. So don't freak out if you have a one-time purchase and you pay it off that next day. Mistake number 3, closing out credit cards. This is definitely a very common mistake that I see people make, especially if you've had a bad history with credit cards, and I can understand why you want to close one out. And that's because if you had some credit card issues in the past and you finally got those things paid off, to close them out really means that you're less likely to spend money on credit cards. However, this can have a really negative effect on your overall credit score, and that is because it really affects your overall credit history and also your credit utilization rate. Let's say that you have 3 credit cards with a total available credit of $15,000. And out of that $15,000, you have $45,000 that you are using, meaning that you have a 30% utilization rate. If you were to close out one of those cards and now your total available credit is only $10,000 and you still have a $45,000 balance that you have due, well, now your utilization rate is 45%, which is going to have a really negative impact on your overall credit score. Not to mention the fact that now you've also affected your overall credit length of history. In this particular category, counts for about 15% of your overall credit score. The longer that you hold on to your credit cards, the overall better length of history that you're going to have, which in turn is going to have a positive impact on your overall credit score. So if you have a credit card right now with no annual fee that you're looking at closing, there really is no harm in just keeping the overall credit card, even if you're not really using it, My suggestion would be to just buy one little item each month. Make sure you pay it off that same day or that next day, and just keep that credit card open to lengthen your overall credit history. Now, if it happens to be a card that does have an annual fee and you're wanting to close it because you don't want to pay for that annual fee, one pro tip that you can do is call your credit card company and see if they can actually downgrade you to a more basic credit card. Many times they're able to do this and it doesn't actually close out your account, which means that you get to benefit on both sides. The next mistake on our list is getting the wrong credit cards early in your journey. Now, like I said, there are so many different types of credit cards ranging from travel to hotel to rewards to cashback. There's literally a credit card for every type of reward out there. So if you are just starting out, it can be really easy to get caught up on which credit card you should get. Because we know from earlier that you don't want to apply for too many credit cards at once, you want to make sure that you pick the right one. My suggestion would be is to sit and think about two main questions. Number one is going to be, what rewards would I be most likely to redeem? Could be on hotel, airfare, gas, or maybe you just want the good cashback offer. The second question that you want to be asking yourself is, what category of spending am I most likely going to be doing my typical purchases with? What you don't want to have happen is sign up for something that has a really good reward incentive, but the way to get that particular reward is to spend in a category that you don't normally spend in. This is going to promote a lot of unnecessary spending and is going to cause you to spend money that you don't really need to. My suggestion is, if you're just starting out and this is one of your first credit cards or you're early in your journey, just pick a no annual credit card out there that has just an overall good base of reward programs. I will leave a link below in the description box to some of the best beginner credit cards for building credit with good rewards. The next mistake that I see people make is bad reward management. The goal of every credit card company is to get you to sign up for their credit cards because that is how they can start making money. The challenge with reward cards is that it typically promotes people to spend money that they shouldn't be spending already. So if you're going to sign up for a credit card that has a really good sign up bonus or offer, make sure that you are already going to make that purchase to begin with. For example, you may receive 50,000 reward points if you spend $4,000 in your first 3 months. If you're already going to be spending that kind of money to begin with, then it'd be okay to sign up for it. What you don't want to do is sign up for it and spend the money that you weren't going to spend to begin with. As a pro tip, what I do is anytime I have a really large purchase coming up, if I have to buy maybe a computer or airline tickets, any type of thing that's going to cost me a decent amount of money, this would be the time that I look at getting a new credit card with a good sign-on bonus because I'm already going to spend the money to begin with. Another way you can take advantage of reward points is to pay for your friends and family if you're going out for dining or trips and things like that. Simply put the expense on your card, have them pay you back immediately, and then you can use their cash to pay off your credit card. The next mistake I see people make is treating your card like a debit card. One of the biggest challenges with credit cards is that it really promotes overspending, and in fact, all kinds of psychology studies show that people tend to spend more money when using a credit card than when using cash or a debit card. And in fact, research at MIT has shown that using credit cards actually activates the reward center of our brain and promotes overspending. Another common mistake that I see people make is only paying the minimum balance on their credit cards. And this really can cost you an insane amount of money over time. The main reason being is that when you pay the minimum balance on a credit card, more than likely you're only covering the interest on the overall payment and nothing's going to the overall principal of the debt payment. Here's a way to estimate how your overall interest charges or payments would work. Let's say that you have a credit card balance of $10,000 and your overall APR is 21%. If you take 21% and you divide by 12 months, that will give you a 1.75% monthly interest rate. If you take that 1.75% and multiply by your total balance, which is $10,000, that's going to give you $175 in interest payments. If your minimum balance doesn't cover at least that 175 or more, then you might actually be accruing more debt or only covering the interest on your overall credit card payments. Now, if you're really struggling to get those minimum payments made on your credit card, I highly suggest that you check out some of my videos on budgeting where I talk about the 50-30-20 rule, which will really help you save money at a much faster rate. In addition to that, you may want to look into something like the snowball or avalanche strategy for debt payoff. But overall, those are the 6 most common credit card mistakes I see people make when using credit cards as a beginner. If this video gave you some value, please be sure to smash that like button, hit the subscribe button. Also hit that little notification bell so you can get more videos and alerts on everything personal finance, investing, credit cards, entrepreneurship, and living life on your terms and creating financial freedom. Let's get out there and let's build that dream.